Hello, my name is Lance Paulson, and I wanted to do a video on the hot topic of auto insurance rates. I think by now you probably know they've increased, or they are increasing. Here is some strategies to bring them down, to make sure you're getting the best auto insurance rate. Now, some of these concepts apply to all carriers. Most are universal, some aren't. So just ask and see if these do apply to your carrier. First, full coverage versus liability only. Determine the value of your vehicle. Look on resources, online resources such as Kelley Blue Book, or here in my local market in Utah, KSL is very popular. You can look at what your car or a comparable to your car is selling for. And if the value is around a couple $1,000s, it may be worthwhile to change to liability only. You can, if you retain full coverage, increase the comprehensive and collision deductibles. That can also generate a savings. CBI is credit-based insurance. Whether we like it or not, it's here and it's been here for years, and every carrier now looks at some form of your insurance history, insurance credit to determine your rates. So if your credit has improved, or if your spouse's credit is possibly better than yours, make sure you add your spouse as a named insured to your policy. Usually insurance companies will use the better of the spouse's credit. Or if you know both have improved, have them reconsider it. Next, if you are under 25 and married, confirm that is your status or classification with the insurance carrier. That can make a difference. Those individuals when under 25 and married are less risky. Bundle your insurance when you can. Have all your policies with one carrier when that makes sense. This whole section is discounts. There's a lot of them. A lot of these are universal too. So multi-policy. The more policies you have with one carrier, the better. So not just auto and home, but boats and motorcycles, scooter, snowmobile. If all those can be with one carrier, that's usually an extra discount for a lot of those. Multi-vehicle, again, having all of your vehicles with one carrier. Auto pay, having the premium come out of an account automatically. Paperless, not being mailed statements, but being emailed statements and or setting up an online account. Paying in full. KYD is our term for know your drive. So a lot of times you'll have drivers or individuals say, I'm a great driver, I should get the best rate, and I agree. This is now their chance to prove it. Usually it's a smartphone app or a plug-in device into the vehicle that somewhat monitors driving characteristics and will result in a premium decrease. Rarely ever will it increase, if not ever. If you're the worst driver, it's probably not going to increase your rates. It's still going to result in a decrease. If you have youthful drivers in your household, young drivers, 16, 17, maybe 18 years old, if they're a good student, meaning if they're a full-time student and getting a 3.0 or a B, average or better, they could qualify for that. There are proactive teen driver programs that if the teen driver participates in that, it'll generate a discount. Ask your carrier about that. And lastly, if you have young, youthful individuals that are engaged in volunteer work, there sometimes are discounts for that. Finally, set up an insurance review, PIR is personal insurance review, with your insurance advisor to see which one of these makes sense for you, or you can even do all of them, and sometimes you're saving 25, 40, 50% by doing all these things at once. Okay? Well, I hope that was helpful. Thank you. My name is Lance Paulson.